Hey, what's going on? What's going on, everybody? Street Trading here with a trade lesson for everybody looking at a 15-minute chart of NEM, Newmont Corporation, basic materials sector. Let's get right into it. So you can see, obviously, the boys took this security up off its short-term downtrend. We're gonna pull out a little bit so you guys can see a little bit of bigger time frame, bigger view. But this is kind of a short-term pullback from the 18th. Had that nice curl to the upside, forming what looked to be a possible runner. Right? Had this push up into the close, actually the second half of Monday session. And what happened? Tuesday morning, gap down, fucking dump out. So these are footprints in the sand. Whenever we're going to give you a little bit of a nugget here. Whenever you see a run up, whether it's the last hour, we look for the last hour, even if it's the last second half of the session previous, a nice solid run up. And the next session, it's a significant gap down. That run up was a fucking just complete orchestration. Complete orchestration. Because these type of run-ups, obviously market makers and institutional traders know that there's so many retail traders that have FOMO, right? Fear of missing out. So they just buy it higher and buy it up, chase it higher, and then guess what? The boys have better averages to slam this thing down. So when we see this, we take note for the next session. And if it gaps down in the pre-market, there's a higher probability what this whole thing was about. Now, we're going to pull back a little bit so you can see longer term view. This thing's been selling off since August, guys. All right? This thing's been selling off since August. So this little, let's go back to the 15-minute. 15-minute here. So this little small, short-term sell-off, quote-unquote, is just the smaller bit of a sell-off from a longer-term sell-off from last August. Okay, so that's why you always gotta have different views. Don't just keep a 1 minute chart up and only look at the 1 minute. It's ridiculous, guys, that you guys trade like that. Look at a bigger view, guys. All right, look at the bigger picture. All right, so you've been seeing, let's show you one more time. You've been seeing this run up, fade, run up, fade, run up, fade. So this is what's going on. This is what these guys are doing, right? So anyway, a little nugget is, before we get into the details, whenever you have a nice run up into the close, whether it's the last hour or the last second half of the session, and there's a gap down the next session, there's a high probability it's going to fade. Now, we ended up taking a couple hits in the beginning before this actually ended up fading out. And that's okay, manage the risk. It's part of the business. Listen, we take stops all the time, guys, all the time. But we manage them and then we hop back in for right. So you don't sweat them, right? You don't sweat the losses. Don't take that loss in the next trade, right? That's you got to keep your mind right. Anyway, let's get down to business. The levels we ended up risking, how we ended up risking, why we scaled in, why we scaled out, where we stopped out, all that good stuff. All right, guys, let's get down to business.